a lot of the tax measures are tax hikes, essentially. Tax hikes are not tax reform. I think economists mostly agree that, in order to have real intergenerational equity, you need comprehensive tax reform in Australia, and we need to start from, again, the high income tax rates here. Root of both of those problems, like why do people need the discount or why do people need to use negative gearing, is because the marginal income tax rates in Australia are too high. There
Welcome everyone to the podcast. It's a pleasure to have you here, and it's also a pleasure to have My Bui from AMP joining me to talk about the federal budget in Australia, some of the winners and losers, and whether it's going to ultimately be good for the Australian economy. Now, Mi is at AMP, and you can find her information or find her socials at Econo Sites on TikTok and on Instagram. All right, so with that in mind, let's leap into what happened with the budget. So, do you want to lead us through what you thought the major changes in the federal budget are?
Hi, and thank you for having me. It's definitely been, I think, an interesting budget this year because I think the government is really going into it, given the backdrop that we've had higher inflation than most of our peers abroad. We've had the most severe productivity problem in Australia. It's been stagnant for the last 10 years. And we have this optics of there's a bit of intergenerational inequity. So these are the three goals that the government are trying to solve in this budget. I would say that they are definitely trying to make a starting point to solve some of this. For example, they are banking some of the new windfalls that we're getting from additional tax revenues from income taxes as well as higher commodity prices, so they can actually be seen in the table of truth in the budget. They're not spending them all, but a lot of the savings are actually backloaded in the later years. So in the early years, the government is still pumping quite a bit of new stimulus into the country, which might make the inflation problem a little bit worse. But again, to your question, I think the big major changes that we are seeing is definitely related to tax. Economists have been calling for tax reform in Australia for a very long time now because we are a very highly taxed country. We're basically the most reliant on income tax among all OECD countries after Norway, I think. And the government, again, seems to be listening to that, and they are doing some tinkering around the edges. They are giving us some extra little deductions as well as tax offsets, but they're actually only worth around $10 a week from the next financial year. So that's a very minor change. And the biggest, I guess, things that they didn't really seem to want to touch are negative gearing as well as capital gains tax concessions. It is interesting that in terms of capital gains tax concession, we are going back to the 1985 era. We are now being taxed on real gains rather than nominal gains, and we are no longer getting the 50% discount on that tax on nominal gains. Instead, we are going to be taxed at the full marginal tax rate, and there is a minimum of 30% tax rate, regardless of what brackets you are. Now, with negative gearing, we are now not getting that benefits of using losses from properties to offset gains in other types of income anymore. That is now only limited to new housing. So both of these changes are basically done to convince young people that it is now easier to get into the markets for them, because yes, it would actually damage some of the investor base. Investors tend to be marginal buyers in the property market. So it definitely scares a little bit some of them off. So it can be thought of as a way to make it easier for first home buyers into the markets. So is that a good thing? Is that a bad thing? I think it depends on your political view that, like, should we have more first home buyers in the market? But I think that, the root of both of those problems, like why do people need the discount or why do people need to use negative gearing, is because the marginal income tax rates in Australia are too high. There is this very interesting stat that the professions or the industries where people are most likely to use negative gearing are actually dentists, anesthesiologists, doctors, and IT consultants. And why? Because they do face a marginal tax rate of 47%. So they are really just trying to maximize the gains on their additional income. And that was not really solved in this budget. Sorry, that was a very
Yeah.
long answer.
A lot of things to touch on there. So I guess we can touch on, I guess, some of the easy ones to deal with. So the high income tax rate, that wasn't really touched. And when you mentioned that the government's banking a lot of savings from this, I'm assuming you're meaning bracket creep, i.e., people going to
Yeah,
high income tax brackets and then the government's getting some money from that. I'm guessing that's
yes.
what you're getting at there, right?
Yeah, that is totally true. We've, as we all know, we've actually had pretty good unemployment rate in Australia. It's running around just above 4%, whereas before COVID we had something like 5 to 6%. Meanwhile, the Treasury forecasts are a little bit more conservative. That means that a lot of our receipts are being increased from that low unemployment rate. Also, the Treasury tends to forecast iron ore prices to go down to a pretty unrealistic $60 per ton. It's actually been above $100 for the last 4 years. So that actually increases states as well as federal revenues on that part as well. So they're getting a lot more money because we've been in good times. So ideally, they should save all of it to save for a rainy day, to save for a real crisis. Because honestly, we haven't really had a real crisis in Australia the past 2 3 years. Yes, we have this issue with oil supplies, but it's not a recession yet. They should be banking those. So they're not spending all of them, but they're not saving all of them either.
Yes, an interesting one because they do certainly say that part of the purpose for the increase in asset taxes is to rebalance things in favor of workers. But the workers didn't get a tax cut, really. I think they got back $250 a year in a tax offset. Were there any other sweeteners for workers in this, in
Yeah,
terms of tax or clear benefits to workers?
Yeah, I think you're right. I think there are some small benefits. So the three are the cut to the lowest marginal tax rate from 16 to 14% over the next 2 financial years. There's that $250 tax offset, which I think they call it WATO or WTO, workers tax offset. And there's also an instant $1,000 deductions for wage earners. So again, based on our calculations, it amounts to around $10 per week in the next financial year and the next financial year. So it's actually quite minimal because if you think about it, like if our purchasing power get eroded over time with high inflation, almost at 5% at the moment. So that's actually kind of nothing. That's not even offsetting the bracket creep. Meanwhile, yesterday when I was looking at the numbers in the budget, there's this interesting number that how much of the government receipts, cash receipts, are coming from income taxes, and we're actually sitting at a high level right now at around 70%. And if you look out into 2030, the government is still projecting it going up to around 71%. Again, another record. It keeps going to new record highs. So it does not seem like this is successful or economic management. Rather is relying on the working class to actually provide for the for the older generations, basically, because they are at the prime working age. So that does give us a question: is this actually fair when you're increasingly relying on the middle class, the wage earners, to actually support the country for all these savings, for all these spending needs?
It's an interesting point you touch on there because it appears that the asset based taxes have increased. But from what you're saying here, that isn't leading to significantly more revenue, at least not changing the revenue mix for the government in terms of income from workers versus assets versus corporations. Is that what you're seeing in the budget?
I get, oh yeah, that I think that is a very good point because I think according to the Treasury own estimates that some investors would definitely be scared away, right? Because it's just not super profitable to maybe invest in existing homes anymore. So in the short term, yes, like you would scare away some investors in the market, and you're actually getting less revenues from that as well. I think it is also interesting that we actually don't have an inheritance tax in Australia, for example. So a lot of the older generations, they are going to face a bit of a higher tax rates when they sell their assets. But to be honest, like eventually those assets will be transferred to the current millennials and Gen Z anyway. So it is quite, to me, I think it is quite an interesting like rejigging of tax rates around the margins, but it is not real tax reform. And again, tax hikes. So a lot of the tax measures are tax hikes essentially. Tax hikes are not tax reform. I think economists mostly agree that, in order to have real intergenerational equity, you need comprehensive tax reform in Australia, and we need to start from, again, the high income tax rates here.
Okay, so let's start on, or touch on, sorry, the capital gains tax changes. Because, as you talked about, those are going to effectively be a minimum capital gains tax rate of 30%, and a shift from a long term capital gains tax discount regime, where if you hold it for more than a year, you've got a 50% discount, to indexing the initial capital base.
Yeah.
So, I have some thoughts about this, but what do you think this is going to do to investors? And do you have any predictions about how investors might change their behavior around these tax changes?
Yeah, you should tell me your thoughts as well. But so I think if you do the modeling, we'll see that there are actually certain circumstances when investors are actually better off under the inflation indexing scheme, under very specific circumstances. Those are when you have higher inflation, when you're in a high inflation regime, and under shorter holding periods. Say, for example, you have 3% inflation and just 4% capital growth, then you're actually better off in the first 10 to 15 years under inflation indexing. Meanwhile, most of the times, if you have longer holding periods, say 15, 20 years, or if you're in a stable inflation environment, or if you have much higher capital growth than inflation, then you're worse off under this new scheme. So what this means is that, for example, with shares, investors are going to prefer dividends shares rather than companies banking that additional windfalls and paying investors through capital growth, right? Because you're punished by holding it for longer. Which again, this is an interesting implications because actually Australian shares are actually among the most highly paid dividends in the world already. That people buy Australian shares for dividends. Meanwhile, we actually want to promote business investment within company over the longer run. So I think that incentives is now gone. So that would change how companies decide to use their additional cash, additional equity in terms of dividends or banking them. Similar to other asset classes, I think that because you're better off in shorter term holding periods, so you actually might see a little bit more shorter term turnover than otherwise. It actually discourages you holding the investments for longer. I mean, investors are smart. They're not dumb people, so they would try to make use of the tax as as best as they could. So I think that's what they would shift to. Yes, they would shift to new housing rather than existing. They might try to keep their investments towards venture capitals because there are some tax incentives for that, but they won't be holding that investments for much longer. I also think that it's quite interesting to see some tax incentives in terms of small business and venture capitals as well. It's not a bad thing to give that tax incentives because again, like I think Australia just needs more business investments overall. Again, it's been so stagnant since 2015 onwards. But it also is a little bit of a tall poppy syndrome in Australia because why you punish when you get a little bit bigger? Because obviously it is a small country here. We have a lot of duopolies and monopolies just because of our size. It is a small size. So in order to have efficient economies of scale, you have to grow big. You want companies, you want businesses to grow into bigger sizes. But a lot of the tax incentives are geared towards only for to keep your business at a certain size, which I thought is quite a bit annoying actually.
All right,
Yeah.
so my thoughts about how this will impact investors. So, say it's shares, focusing on well, actually, let's focus on the investor for the sake of for the start. So, an investor, I feel like under the new regime versus the old, you're still going to have someone who wants to invest a certain pool of money. It's now just going to be a matter of how they invest that pool of money. So whereas before they might have gone all in into a renovate and flip property, now I'm thinking that might be less advantaged. So what they might try to do, and I was thinking through what is the most tax advantaged process. A longer term buy and hold on a stable piece of property that grows roughly in line with inflation, that you can lever up. And if it grows roughly in line with inflation, then you have no capital gains tax because the real gains are zero. But if you've levered it up, say fivefold, so an 80% mortgage, then you're able to get access to higher capital growth. So it grows at 2.5% per year in raw terms. that's about 12.5% on your money. So you end up with 12.5% tax free relative to, say, if you do invest in something else that is not levered. The challenge with that, of course, is negative gearing, which has now been removed. So I think that works particularly if it's an investor that already has another property that is positively geared. Then they buy a second property that is negatively geared, and you could offset the two against one another, just not against other income. So I could see that occurring. So less dynamism in terms of we'll buy a property that's dilapidated, fix it up, then flip it, which I think is ironic because that, in fact, adds to the quality of housing supply. I'm not sure whether you're seeing a similar type of logic or whether you think that maybe I'm off base there in how I'm thinking investors might behave.
I mean, I agree with that because I do agree that, investors would try to minimize the holding period to minimize the tax. So, so there we go. Like there might be more flippers versus long-term holders of the market. Again, is that good or bad? It's actually hard to say. I think another thing is that investors might actually try to take advantage of superannuation a lot more as well, because a lot of the tax concessions are still preserved for superannuations, including SMSFs, which are basically self-managed super funds. So you actually might see a lot more investors trying to use these kind of vehicles to avoid taxes as well. I know that there's also now like a 30% minimum tax rate on trust distributions as well. But which is in line with that minimum 30% rate on capital gains tax. But it's actually still lower than the top marginal tax rates. So I will still see investors using it because even though it's higher than before, but it's still lower than the max that they can pay.
Yeah, I was also wondering about shares. So we've touched on negative gearing, but unless I've misinterpreted the budget, interest on margin loans can still theoretically be negatively geared. Now, I'm getting
Yes.
some mixed feedback about this, but that means in theory, you might be incentivized to go out and get a margin loan to buy a ETF paying fully franked dividends. Am I misinterpreting that or am I missing something there?
I actually do agree as well. I mean, I do think that shares are one of the winners, not the winners, but the winners versus properties in this budget because it does seems like the concession is still there for shares, so people might flock to that. And as I mentioned, a lot of investors would flock to super funds as well because it's more tax efficient. So without properties, what you buy shares as well. I actually saw an interesting comment today that there are two things that this budget does. One is that it just wants people to invest into either new housing or superannuation. And second of all, another winner is going to be accountants and financial advisors because people would increasingly try to use these, a little bit more complex vehicles to actually invest.
True, and I had seen, admittedly, this is just browsing Twitter, so it's hardly scientific, very anecdotal, but advises on people moving overseas, whether or not that results in people moving overseas or whether it's just initial outreach in the, I guess, the chaos that is the budget remains to be seen. But some of those advisors are at least saying they're getting more inquiries as well.
Yeah, definitely. I mean, I like your point about people moving abroad. I'm not sure there's still no wealth tax like in the UK, for example. So I don't really see a drastic change. But you do see that working in finance, for example, when companies like internet multinational companies want to come here, it's harder to get talents because a lot of people actually try to move into lower marginal tax rate countries. Like a lot of people go to Singapore or Dubai because like you do have a little bit of brain drain at the top there. I know that, those are the top people in their fields. They're not the everyday Australians, so not everyone would relate to them. But if you want higher productivity as a country, you do want to keep talents here in Australia. So it's still a little bit of an issue.
There's a slightly ironic result from an old paper by two authors, Holmstrom and Milgram, where there's this weird quirk of the paper that the more talented the individual, the greater the incentive you should be giving them. Now, that's in a corporate incentive setting framework, so you give them a greater profit share, which would tend to imply that in this case, if it's the type of person that could be attracted to go overseas because they're a talented individual, you'd want to give them more of their share of their wage than perhaps less talented individuals. And that is possibly the opposite of what we're seeing happen with some of our taxation settings. potentially leading toward people looking at Singapore or Dubai or Hong Kong or myriad other places, I'm thinking.
I mean, I agree. I think another consequence of that high marginal tax rate is a very simple example. For example, you're in a job, um, say you're getting just paying just a normal wage, for example, but you're getting another job offer, another company that allows you to work a little bit more productively, and they give you, say, $20,000 extra per year. But if you think about that in after-tax terms, you're only getting another 10,000 per year extra. A lot of people wouldn't really move for 10,000 a year. It's not worth, you uprooting your life, making friends with new colleagues. So even though it's just a very small jump, it disincentivizes people from actually going up the next step in their career. And this applies to literally every single one, because either you
Yeah.
don't want to move into the next bracket, for example, for that little marginal gains. So I think it does hurt productivity. Again, it's another issue in the budget that they try to solve as well. They did try to tinker with it by, lowering some compliance costs, but I would say that they are still very marginal changes.
Yeah, it appears for many businesses, compliance costs are still large and increasing. So, anecdotally, in my parents' medical practice, they have to do accreditation every year for it to, I guess, remain well accredited. And the requirements for accreditation, well, there's continued scope creep. So, it's a medical practice, but going forward, they also have environmental factors to consider in relation to that. And the
Mm.
additional things that are piled onto business make it more challenging for them to operate, which does create a perverse incentive in terms of entrepreneurship, at least from what I've observed as well. It's just very expensive to do business in Australia.
Yeah, I think that definitely is the sentiment. Like if you go anywhere in any industry, for example, I talk a lot with financial advisors in Australia. There's actually a shortage of financial advisors in Australia, but it's hard to get young people going into the profession because there's just too much admin and compliance work involved with it, especially after the Royal Commission in Australia. So now that means that a lot of older Australians who actually need advice the most, or even younger Australians, they cannot afford to take on a financial advisors, even though they are the ones who benefit the most from it. I think another example that I really like about the over-regulation story in Australia is from housing. Again, it's a hot issue, and the government should solve it. The HIA has done some analysis, and the cost of a greenfield, so basically a completely new home and land package in Sydney, is around $1.5 million. $700,000 out of that 1.5 mil is actually compliance costs. So that includes the stamp duty as well as regulatory costs, approvals, getting engineers to come look at things for additional approvals. So that is crazy. Half of the cost of a new house in Sydney is actually approval costs. So again, how do you solve the fact that you want more young people to get into the housing market? I think that's something that they should look at the
Yeah,
first,
so
lowering that cost.
yeah, so it's worth touching on housing supply then. So one thing that you mentioned before was maybe new builds could be advantaged. And I was thinking through this because new builds, often plan apartments, are often really expensive relative to existing ones. So
Yes.
when I was thinking about this, I kind of observed that if your returns are going to be negative, you're negatively geared buying a new apartment, and the
Mm.
capital growth is going to be really low, is there really an incentive to go and buy these new apartments? And if there's not much incentive for an investor to buy off the plan, or indeed for an owner occupier, because neither of them would have that incentive, no one wants to lose equity.
Mm.
The question is, what do we think is going to happen to new builds? Do we think new builds are going to be potentially improved due to negative gearing being restricted to them? Or do you think people would just go, well, I'd rather not lose money anyway, because if I'm
Mm.
negatively gearing and then the price goes backwards, what's the point? What's your
Hmm.
take on it?
I think it is quite hard. I mean, I haven't really done any detailed modeling on this. But again, the Treasury does agree that, in the short term, that there actually might be a bit less supply. Their assumptions is that over the longer run, the supply would actually recover back up. Um, I haven't done any modeling on it, so I just would just have to take their word on it. Um, But I do think that, in the short run, it would also push up rents for those apartments because, again, as you said, it scare away investors a little bit. So it's actually a little bit worse off for renters in the short run. So I think that's something that, young people should keep in mind with this budget as well. In the budget paper, is kind of deep down in some pages they say that rents would go up by $2 per week in the short run. They don't provide a figure for the long run when they say that supply would go back up. So there we go. Like there's actually some proof in there. That's a little bit of an issue, I think. I still think that property is a good investment in Australia. I mean, again, like especially when I say properties new builds versus existing homes, because obviously between the two, you you is there's a little bit more incentives in that area. And I think the reason why people flock to new builds nowadays, or the reason why new builds are so much more expensive, is also because of labor costs and material costs in Australia that has been too high. So, I mean, how do you solve it? How do you solve the fact that in the short run there would be a little bit less supply, given negative sentiment in the construction industry, given negative sentiment from the investor base? You probably have to get the government to slow down a little bit on their infrastructure projects. We all know that we have a tradie shortage in Australia. If you've ever renovated in the past 2 or 3 years, you would know this. But a lot of government projects are actually sucking up the construction labor. And I think the quickest way to actually solve this little issue is that, again, the government has to slow down a little bit in the short term, making the way for the private sector a little bit so that we can have cheaper new builds.
So do you think we'd get more supply if the government maybe wound back some of the myriad charges that make up half of the construction cost? Because it appears like that would be one of the ways they could go about trying to get more supply, if that's really what they're focused on.
Yeah, I think that that's what it is. I think they should basically like get rid of red tape. Again, it sounds easier than it says. I'm not like a policy maker, so I understand that it takes time to implement these changes. But what is the cheapest way to actually solve this housing issue in Australia? That's I think that's the first thing you tackle. Actually, I want to make another point in terms of that, new builds and like first-home buyers going to the market. It's actually quite interesting that they say over the next decade, around 75,000 more first-home buyers will get into the market, because that represents the additional supply. But that supply number is actually very little because every single year we are already underbuilding versus population growth by 60 to 70,000 dwelling units if we want to keep house prices a little bit more stable. So that 75,000 over the next decade only makes up the shortfall for one single year, and we've been underbuilding for around 3 4 years now. And again, another way to put that number into context is that 7,500 new buyers per year only represents around 6% of the market. So according to this treasury model, there is an additional supply there, but is that a major increase in supply? It's actually quite little versus the stock level. It's a flow versus stock thing.
Well, I guess I have two questions as a result of that then. I guess the first one really is these tax increases. Firstly, do we actually think they're going to raise much revenue? I.e., the higher capital gains tax, the removal of negative gearing, or is that likely to just result in a shift in investor behavior, which is what I was personally predicting, in which case you get a deadweight loss. The investor ends up worse off than they were before. It's not clear necessarily that someone who doesn't have a house is better off because now saving is harder because of the higher taxes. And if the government's not making any more money, then it just appears that everyone's going backwards and you get a deadweight loss. That's how I saw it, but maybe you're seeing a different interpretation in the industry.
Yeah, I mean, you have a good point. As I said, like investors they are smart, so they would try to minimize as much of their taxes as possible, and so we really shouldn't kind of scare them away in that sense. Um, I mean, again, I think property is still a good investment in Australia. You are still going to collect a little bit more tax on it, but over the long run, I am not positive that it leads to new investments into Australia. So it's like you're not going to grow your investor base with that tax hikes without lowering other types of tax, which they haven't. So yeah, I guess I do agree with the sentiment that like mechanically the existing investor base in Australia, you might collect a little bit more tax from them. I don't think this would do anything to attract new investments into Australia, into the country.
Right. So I guess that really begs the question.
Yeah.
A follow up is we've got a lot of population growth, but not necessarily a lot of GDP growth per person. which kind of means that we're not really ending up with a pie growing mindset. So, say we're focusing on population growth at the moment. Um, what do you think the government's underlying economic objective is with the population growth currently, if we're having population growth that is exceeding the amount of housing in the market?
Mm. It is interesting because I think a lot of people have criticized Australia in a sense by, running high immigration. I mean, the Treasury forecast for the next 4 or 5 years actually have been lower versus last year, but they still remain quite high, above 200,000 net migration target per year. This year is actually 200, this coming year is actually 295,000 people, which is actually quite a lot in Australia. I think that, economically, when you think about the very basic supply and demand theory, additional immigration is not good or bad, right? Because it actually adds to both the supply and demand curve in the economy. But I think in Australia, the issue is that mix of immigration into the country, is that actually good or bad? For let's go back to housing, for example. We have more people. Technically, we should have more builders in Australia. We should have more tradies. But no, there's this stats that actually only around 2.8% of the immigration population into Australia are tradies or in the construction industry. That percentage in the native born population is actually 9%. So you get more people in, but you're not actually importing tradies. Meanwhile, the regulations and qualifications to actually, I don't know, become an electrician and put a light bulb in this country is actually too high. So you're not actually getting additional labor out from it. So you're not actually getting that additional supply, but you only add to demand. So I think that's the core issue. It's not just a number issue. I think it's a mix of immigration issue. So I think in terms of the numbers, I don't really have a big problem with it, but I do think that, it actually goes back to the deregulation problem. I think Australia needs to deregulate more. For example, you want to lower healthcare prices. Why don't you make it easier for doctors to work in Australia? And like and make it easier for qualifications in Western countries to be recognized here, or even plumbers or electricians in Australia, or builders. Just things like that. Every single industry, you actually hear the exact same story here with immigration. It's not inherently bad. You just need to make it better for the talents to come here and for the right mix of people to come here.
I've observed the same anecdotally because my interpretation of it and my observation is when Australia has immigration, it is getting a lot of the demand impact, which leads to inflation and lag, but it's underutilizing the potential additional supply of various things being built. And my observation of this, anecdotally anyway, is a lot of it has to do with work rights and licensing. In particular, you will have observed, probably in your company, I haven't looked at jobs there, but often most companies require permanent residency. So that means that if someone's come in on temporary residency, even if they're highly qualified, it's exponentially more difficult for them to get a job in a company because they simply won't be interviewed. They won't even be given a
Mm,
chance.
mm,
Similarly, with the myriad other licenses. So, in law, which is where my background is, say you come in with a law degree, even if it's very good as a law degree, there's an additional step that could easily take you another year to be able to work,
mm,
during which time you've got the demand impact from the person being here, but not the supply of additional goods and services. At least
mm.
that's what I'm observing. Is that what you're getting at with the immigration settings?
Yeah, I do agree. I think one funny thing is that, so I'm an immigrant as well. So I came to Australia in 2020. And one thing I've observed is that, say, for example, we have a lot of international students here in Australia, but a lot of the international students, they flock to industries or professions that are um, designated as the priority list. For example, accountants. Apparently, we have a shortage of accountants in Australia, so a lot of people try to do that rather than actually doing the things that are the best. Or even if they have a degree in something else abroad, like even law, for example, they would try to go into some certain professions that are on that visa list just so they can stay here. So there's this group of people that do that, which I think it is really bad because it seems like you're just running an immigration pipeline for out some arbitrary qualifications from the Home Affairs Department rather than looking at the actual shortage of the industry. Again, tradies is a big deal here. I've never seen a country that has so many regulations on who can actually put a light bulb or put a tap in my bathroom because I just recently did renovations here. So yeah, I mean, I agree. I think we're not really utilizing the most of that immigration pipeline. I do think that, there's a lot of scapegoats in terms of when you mention the word immigration. But again, as we've said, economically, it's actually not good or bad. I think it is bad when you have such a big influx of people. It massively adds to demand in the short terms. Meanwhile, you're not really getting any potential out of the supply in labor capacity. Yeah, I mean, it is definitely a long-term issue for Australia. I think, and another thing is that it goes back to that tax story that we said at the beginning as well. We're not actually getting the top talents in certain industries here as well because of that high marginal tax rates. If you want to get the best people who can supply the most to the economy because they are the most productive, then you really need to lower that tax rates.
Yes, you never hear of anyone wanting to move from Dubai back to Sydney. It's always the other way around, or from Singapore back to Sydney, unless they're kind of doing it for lifestyle reasons. In which
Yeah.
case, you're not getting the most productive move. It's like,
Yes.
oh, I'm moving back to Sydney because I want to be semi-retired, rather than moving back to Sydney because I want to create the next unicorn,
Yeah.
which is probably not. I believe it was Chris Joy who said that Australia risks becoming the Ibiza of the South, which is probably not the best thing for it to try to achieve.
I do agree. I guess like I'm thinking of it as Florida as well. Like, a lot of people move there
Yeah,
just to
yeah,
retire.
true. I
But
guess that leads me on to one thing you touched on with the immigration forecasts. There's lots of forecasts in the budget documents,
yes.
and some of them look optimistic. Uh, for example, inflation going back down to 2.5% by next year, I believe it was, and NDAS spending decreasing by some $38 billion. So, in general terms, I guess the first question is, can you give us some insight into how they come up with these forecasts? Like, what is their process that leads them to believe that that is what the number is going to be?
I mean, I do think that there's political agnostic agency sitting somewhere in Canberra that does all of this. Hopefully, it's not just the consultants. Hopefully, they do have some staff doing this. I do think that some forecasts are quite optimistic. Even the RBA forecast, like lately, I find them quite optimistic as well. Because Australia does have, we are in a bit of a pickle here. We have high inflation but low growth. So to be honest, the RBA has to sacrifice one or the other. Do you actually temper inflation by aggressive hiking quite aggressively or not? Which they seem to be choosing to do that. They seem to be choosing to temper inflation. And I personally think we might actually see slightly lower growth numbers in the short term compared to the Treasury forecast. But I think if you look at previous years, this is nothing new because if you plot all the outer year budget forecasts versus what the actual budgets are, it's all over the place. It's never, exact at all. And a lot of that actually depends on the first problem that we talked about, bracket creep and higher windfalls from higher commodity prices. So a lot of that differences between forecasts and actual budget balances are actually due to that, external good luck rather than their own forecast. So yeah, I mean, I would take that with a grain of salt. But even when you look at their forecast, it's not great with this budget. They do forecast that the budget deficit to go back into balance and actually record a small surplus by 2037. So we're still in. So again, they are quite optimistic given that we have so many spending needs, but we're still not getting back to budget balance in another decade. So I think that is a little bit depressing. I mean, I do give them credits for the fact that they have found some savings. The budget numbers are better than last time we saw them in December with the MyEFO, but they're not great forecasts.
All right, so that I guess leads me to, I guess, two sides of the same coin in the little time we have left. If you were to look for additional ways to try to perhaps grow the economy broadly or potentially grow revenue, what would your focus be on if you were perhaps in Treasury? If Treasury were to ask either of us, for example, what do you think we should say?
Oh, it is a hard question because yeah, I mean, I agree with you that like it's hard to find savings at the moment. Like if you look at any like spending needs, we're having growing aging population, we have more health needs, or we have more defense needs in Australia. So it seems like we do have to spend a lot more. So I think in terms of revenues, a lot of economists and I mean, I do agree as well. We think that we need to lower income taxes for individuals. It might not actually lead to lower tax receipts because you might actually have more people going into the labor market. For example, you have more talents coming here, for example. They pay higher wages, they get paid higher wages. So you actually make an offset from that. If you need to find additional revenue sources in the near term, I mean, raising the GST might be an idea. Actually, relative to a lot of other countries, our GST are quite low. And it's not just low in terms of the numbers, the 10% rate, but it's low in terms of the tax base. So over the last 25 years, the number of items or the volume of items that are being taxed under GST has gone down and down over the years. So you're actually getting less and less from it, and you're getting more and more from income taxes. Some people have come to me and said that why are you raising GST? Because it's a regressive tax, whereas income tax is a progressive tax. But I actually think that doing a little bit of that shift is the best way to address intergenerational inequity. Because why? Think about an older person in Australia. If you think that it's unfair that they have a lot of wealth, which might not be that fair because I mean they've gone through hard times, they have invested their money. But let's just take the assumption that it's a bit unfair that they got to this point in life. They're actually not paying a lot of income taxes because they are in their retirement phase. They're not actually working a high paying jobs. Meanwhile, they're actually paying a bit more in terms of consumption and GST, whereas the younger people actually pay a lot of taxes by working their ass off. So I think if you really have to reject the tax and do comprehensive tax reform, then we really need to lower that income taxes and increase a little bit in terms of consumption tax. And economically, I think the same rate of GST also means that it's a pretty efficient tax. It doesn't distort investment decisions because it's the same rate.
Yeah, I think you're right there. I think the way I often see it is in terms of trying to grow the economic pie,
Mm,
enabling the government to get a smaller slice, but of a larger pie
mm,
relative to what they might end up doing, which is shrinking the economic pie and trying to take a larger slice. Looking at this recently, the United Kingdom, for example, recently moved to
mm,
increase their capital gains tax rate to 24%. And then, admittedly, several things were going on at the same time, but the capital gains tax receipts fell by between 10 and 18%.
mm,
So it's an interesting one where raising the rate doesn't necessarily result in getting more revenue. I think we
mm,
saw that in the United Kingdom. California also has stumbled across this with
mm,
its attempt to bring in the 5% billionaire tax. New York's found similar things. So, what I've often observed is a number of countries, maybe Australia, UK,
mm.
the United States, on the wrong side of what is called the Laffer curve to some extent,
Yes.
anecdotally.
Mm,
They seem to be already at the stage where increasing rates results in less growth,
mm,
and they're just kind of chasing their tail, not quite
mm,
realizing that they're kind of in a bad equilibrium where they're just
mm,
continually making things worse. That's at least my observation of what is
mm.
happening in these economies at the moment.
I have a good anecdote with that, and this is from the budget as well with the Laffer curve. Like it sounds really big when you mention a lot of these countries, but a very good example of that is the tobacco excise. So there's this line in like the second pitch of the budget that the government says that they admit they will collect $8 billion less in tobacco excise in Australia. Well, and they call it unexcisable. It's actually because the excise rate has gone up so much that people resort to illegal tobacco instead. So, and $8 billion is a lot. It's actually more than what the government is earmarking for that additional fuel reserves, for example. So it is a lot of money lost there by actually taxing tobacco too high in Australia. It's good to tax tobacco high because it has a lot of health impacts in the long run. It costs the society, but when you go that far in that little Laffer curve, you're actually getting less money, which I find is a pretty hilarious outcome in this budget.
True is interesting. I observed in 2025, and I'm mindful that you have many meetings to get to today, but I observed
Mm,
in 2025, Vietnam decided to get rid of capital gains tax, replace it
mm,
with a 2% transaction tax, which I believe is effective from April 2026, which I observed was interesting because it was clearly an attempt to drive more growth,
mm,
thereby enabling them to collect more corporate tax revenue, or in this case, trading revenue from the transaction
mm,
turnovers, which might be an interesting experiment to observe how that works out. and whether that potentially leads to more overall GDP growth.
Mm.
Not sure at the moment, but at least will give us an insight into what happens when you go the opposite direction of what Australia is doing at the moment.
Yeah, that is interesting. I mean, it is in an opposite position versus Australia. Vietnam is definitely not as rich as Australia by any measure that you cut it, but they are an emerging markets country, and I think the country is in a little bit of a pickle with less globalization and less trade, and they're really trying to shore it up again. I think, I guess this is a good way to end it as well. Like, remember that Australia, we do start out as a rich country in terms of a lot of different measures, like standard of living or GDP per capita. So it's good, that the countries want to improve productivity, but we should always kind of remember that, we have all of these debates around NDIS because we can actually afford it because we are a rich country. A lot of poor countries, they can't even afford that. So, I mean, given that the government of the day has so much political capital, I do hope that they can use that political capital to make some hard choices around tax changes. It is hard to explain to the general public, say, for example, why you have to lower income taxes and especially, the higher rates of income taxes at the top marginal tax rates, because it seems unfair to like someone who just got out of uni who's not in that tax rate, or you have to raise GST in certain areas, for example. It is hard to explain to them, but I think if we want to really exploit, the best to what we've had in Australia, it's a resource-rich country, it has high standards of living, then the government needs to make those hard choices. But are they going to do it? I'm just not sure. So we can only hope.
We can just hope that the government doesn't decide to make a rich country poorer, which is, I guess, always the fear that one has when productivity looks like it's wavering a little bit.
Mm. I mean, I don't hope we go down that path. I think that, Australia does have a good functioning democracy. So it's going to be interesting to see what the opposition comes up with this coming Thursday, I think, when they come up with the budget reply as well. I think, oh, and then I think this is the final thing to remember. A lot of these changes in the budgets have to be legislated as well. Um, which basically they have to pass the House, which is not an issue, but the Senate as well. And there seems to be a little bit of like hiccup in there because I'm not sure if the Labour can rely on the Greens this time to pass it in the Senate. So there still might be changes. I think that it's good that we have some sort of opposition in Australia. We'll see how the debate gets shaped going forward.
Yeah, the Greens seem to be not thrilled with the budget changes, but we will see whether or not they get through. They only really need to convince the Greens for it to pass, but the Greens appear to be particularly unpleased about the tax measures being grandfathered, that is,
Oh.
existing investors being largely exempted to some extent from the changes.
Mm.
Whether they require some changes to that for it to pass is not clear. And I think it would be politically risky for the government to not grandfather some of these moves.
Yeah, agree. I think you set up a precedent that you renege on your promises, which is not a good image for Australia to attract capital either.
True, although one might wonder whether in 2025 they probably reneged on their 2025 promise as well. So I guess it always is a matter of open to interpretation.
Mm, I
Anyway,
agree.
thank you so much for joining me. We should probably leave it there. We'll see what happens, whether this actually passes. But thank you so much for joining me. It's been really interesting discussing what's happening with the budget, and I'm sure we'll see a lot more debate going forward, particularly in the light of the opposition's reply speech this coming Thursday.
Thank you, Mark, for having me. That was a good chat.